Here's an example, as we studied for the first exam, about the interchange between the supplies account and supplies expense. You'll recall that supplies is a current asset account, so it's increased by debits, decreased by credits. We would expect to find a beginning balance for supplies, that's an asset, or that's a debit, and an ending balance, that's a debit as well. Supplies are increased when we buy supplies, and supplies are reduced when they're used, meaning they become an expense. So when I see the supplies expense account, that's the amount that shows up on the income statement that has been used or consumed. So in this one, Study Inc. purchased supplies at a cost of $3,000 during the year, meaning we debited supplies and credited accounts payable or cash. On January 1, the supplies on hand were $600, and on December 31, when we counted the supplies inventory that were in the supply cabinet, we only had $500 of supplies. So right now in the supplies account, we have a beginning balance of $600 plus we bought $3,000. Well, only $500 are left. So the difference between $3,600 and $500 must be the amount of supplies that were used or consumed. And so we would have made the adjusting journal entry, which would have debited supplies expense for $3,100 and credited supplies for $3,100. And by making that adjusting journal entry and posting it to these accounts, do I end up with the appropriate ending balance of $500? And I do. So, the question, how much supplies expense did Study report during the year? The supplies expense was C, $3,100. The ending balance is $500. And so supplies expense has a balance of $3,100. So, hope that helped with adjusting entries for supplies, or how we move assets when they're used or consumed into expense accounts.